Hey everyone, welcome back to our Options Masterclass Series. This is video 3.1- What are options? Alright, let's dive in. So, what exactly are options? Simply put, options are financial contracts that give you the right, but not the obligation, to buy or sell an asset at a predetermined price before a specific date. Think of them as a way to gain leverage in the market without needing the full capital up front. Now there are two main types of options, calls and puts. A call option gives you the right to buy an asset at a set price. This is typically used when you believe the price of the asset is going to increase. On the flip side, a put option gives you the right to sell an asset at a predetermined price. This is useful if you think the asset's price is going to drop. But how do these options actually work? When you buy a call option, you're essentially paying a premium for the right to purchase the asset at the strike price before the option expires. If the asset's price goes above the strike price, you can exercise the option and buy it at a discount, or sell the option for a profit. With a put option, you pay a premium for the right to sell the asset at the strike price. If the asset's price falls below the strike price, you can sell the option at a higher price than the current market value, or exercise it and sell the asset at the strike price. Now, why should you consider investing in options? Well, options can be a powerful tool for hedging risk, generating income, or speculating on market movements. They offer flexibility and can enhance your investment strategies. That's a wrap for today. Make sure to subscribe and hit the bell icon so you won't miss the next video in our series. Until next time, happy trading.